This is the Fargo 5. I'm Conrad Fargo. We're going into the Fargo Fresh with Paul Cook from Capital Credit Union. Hello, Paul.
Hey, Conrad.
So we are moving on. Fargo Fresh, so I have moved. So we were talking during the break. Fargo 5 is a relatively new show. It just started July last year. And, you know, when I'm not making and producing the show, I think about it, but I'm not tweaking it too much here and there. I kind of figuring it out as I go along. The Fargo Fresh originally was just like local news, you know, but there's not always something exciting that isn't, you know, maybe a little dramatic. So, because I don't want to talk about something, you know, somebody gets run over by a car or a house burns down. I don't want to talk about that, right? So I've been developing the segment Fargo Fresh, you know, just as long as it's something new and topical. So for a long time now, I've been going to the YouTube algorithm. So when you have a YouTube channel, you can go on to the back end and you type in stuff and they'll tell you, okay, we have people who are searching for this. You know, you give me a word and I'll tell you what words people are adding to it. They're searching for this and they're not getting a video, or they're searching for it, stuff's coming up and they're walking away, right? And so then they rank it high, medium, and low. Not everything even has high search, so some things are just saturated, right? Like some things they have enough video, people are finding what they want, don't bother, right? For yours, I put in mortgage. Obviously, you're a mortgage loan officer. I put in mortgage, and it came up with 3 full pages of high search results. So people are actually looking for content related to mortgages, and they're not finding anything about it. It's real simple stuff, though, that they're looking for. So the top 3 was mortgage rates today, and mortgage interest rates. So people are really interested about those rates. Why do you think that is?
Well, I mean, that's one of the biggest factors when you're buying a house. That interest rate affects price. The higher the rate, the higher your monthly payment. So that's the concern. And right now, rates are higher than they have been recently. You know, for a first-time homebuyer right now, if you're in North Dakota, it's a 5% rate, which is really great. But if you don't fit that program, you're probably looking somewhere in the low to upper 6s, and that can make a difference of a couple $100 in your monthly payment. And
so, what are rates? What is controlling those rates?
So
he asks,
yes,
unknowingly.
That's a very, very good question. It's fairly complicated, but. The Federal Reserve, you know, sets the rate of the Fed funds rate, and other rates are kind of tied to that. So, you know, for example, during the pandemic, the Fed cut the rates to stimulate the economy. Mortgage rates went down, and now they've been increasing rates to fight inflation. So mortgage rates have been going way up. So now moving forward, what we're looking towards is hopefully rates will start coming down. But that's kind of it's market driven is what affects the rates.
Yeah. Well, so why not just keep them low all the time?
Well, you know what? We would love that. But just when inflation starts creeping in, that's where prices go up. One way to combat that is to increase rates. So that's why they're.
Where does the inflation come from?
Inflation comes from. This might be a little complex for our group, but excess money supply in the system.
Yeah.
So then, what the increased rates? You know, I don't know if we want to get into quantitative tightening, but basically the Fed is reducing the money supply, and then after they do that, that will decrease the stop the increase in inflation. I think the Fed is targeting, they want inflation at 2%. It's still above that level, so I think we're going to see the rates kind of stay roughly where they're at until the inflation gets under control, and then we'll see rates come back down.
And I think we recently believed that they were going to be cutting them relatively soon.
Absolutely. There was rumor that they were going to get cut in March, and then there was some inflation data that was not favorable. And so now it looks like maybe by June rates might get cut.
Yeah, hopefully.
Yes, fingers crossed.
Hopefully. Yeah, so interest rates, I don't know that it's complicated. They seem to me pretty straightforward as far as the Federal Reserve sets the price of money with their interest rates, and they just set it, right? They get to pick where it is and where it isn't, and when they have it low, that creates a whole bunch of extra dollars, right?
Absolutely, that's 100% correct.
What's quantitative easing, though?
Quantitative easing is when like when Treasury bills come due, they don't buy them back. So you're basically decreasing the money supply in the system, and then eventually that'll allow inflation to slow down.
So it's really just a matter. So this is something I This is actually probably my topic du jour. I know quite a bit. A lot about this. And in fact, I didn't even open up with the joke. I was going to open up with my joke. This just popped into me. Are you ready for a joke? I have an interest rate joke. Are you ready?
Yep.
There's a lot of money to be made by lowering interest rates. Do you like?
Yes.
You get that? You get it? You
Yeah.
get it? You see, because when the interest rates are lowered, because people don't really realize this, the money supply, a lot of it is, correct me if I'm wrong, it's created by the banks themselves.
Right.
So it's not the Federal Reserve or even the U.S. Treasury who creates dollars. So we have what's called the overall money supply, and I'm not talking M0, I'm talking M3, right? Because you get M0, which is dollars that are just created by the Treasury, right?
Right.
And then those dollars go into the bank, and then the bank doesn't keep all the dollars.
That's right. How banks make their money is by lending it out, and
but then that dollar exists in two places at once, and it exists on the books in two places at once. So basically, when the bank loans out via a thing called fractional reserve banking, the banks themselves increase the money supply.
Absolutely. It's kind of created out of thin air.
So when the interest rates go down, the money supply expands because more loans are given out at that lower rate, and they're able to create more loans.
Right.
That's
exactly it. And then one of the risks of increasing the money supply too much is inflation. So then they kind of reverse that process where they decrease the money supply to combat inflation.
Well, I find it quite intuitive. So, and I always make it as this example. Let's say you're on an island, okay, and all we have is dollars and coconuts. If I got 100 coconuts and $100, how much does a coconut cost? Probably roughly $1, right? So we can trade each dollar for a coconut. Well, now if I double the money supply of dollars to $200 and I still only have 100 coconuts, what's the price of coconuts now? Well, the price of coconuts just doubled because the money supply doubled.
Right.
Right? And so what we currently have and why we have fiat currency, this is my understanding of it, you tell me where I'm wrong, is we used to have gold, right? And that's something that you can't just make out of thin air. But what happened is that the number of coconuts just kept expanding. And so the prices would go down, right? So because if you all of a sudden you have 200 coconuts but still only $100 in gold, now what's the price of coconuts? Well, now they're only 50 cents. Right? Because you got twice as many coconuts but the same amount of dollars, right? So if I know that tomorrow coconuts are going to be 50 cents but today they're $1, why am I buying coconuts?
Right.
I'm just going to wait.
Right.
Right? And so that's why what they're doing, they call it stimulating the economy. That's why their target inflation rate isn't 0, it's 2%. They want you to be incentivized to buy coconuts today rather than tomorrow.
Right.
So their overall plan is, as the production of coconuts expands, they want to expand the amount of dollars available to go with that.
Yep, that's exactly it. They think that 2% is kind of the sweet spot to keep the economy chugging along.
And so we have this problem, though, that during COVID, not only did we stopped making coconuts and our supply went down, coconuts went down, everything went down, the dollars went up. There's way, 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 way more dollars than there ever were before. And so what's happening is the prices are going up because all those dollars are in the system. So before they can lower the interest rates, they need to wait for those prices to balance out.
Right, exactly correct.
Yeah, so very exciting stuff. I like interest rates. I like Federal Reserve. I like talking about fiat currency and what it does and what it doesn't do and why it exists. I think that's very exciting. Did you have more to say on that, or I think
I think you covered it very well. Where I wanted to emphasize is directionally we know rates are going to get lower. The tricky part as a mortgage lender to advise people is the timing on it. If you're going to buy a house in 30, 60, or 90 days, it's kind of what are rates going to be? Do you lock the loan right now, or do you wait? Do you think they're going to go down? And you could get caught with rates going up. So that's the challenging part as a lender. I can tell you where rates are and where I think they're going to go, but it's in the short term, it's very tough to predict on a daily or weekly basis.
And you're basically just gambling. I mean,
little bit, yes.
You're saying I suspect it's going to go here, so I put my money on that. And I put all my money on red. If it hits black, too bad. That's
yes.
That's why my advice as a realtor at Berkshire Hathaway Home Services Premier Properties is the gambling you want to do is on stocks and bonds. on your home, because the difference is going to be marginal. I mean, at the largest outset, you're talking like a 20% marginal difference. Meanwhile, you're in a house that's too small for you, or God forbid, renting, right? Like,
Right.
don't try to play the market. And if you want to buy investment property, that's one thing. But you want to buy a house and buy a home, live your life. Live your life. Don't. It's not gambling. It's lifestyle. No.
And that's a lot of what I say too. Is
Yeah.
like, if you're okay with the rate, let's lock it.
Yeah.
You're going to be much more happy. If rates go up, you're going to be way more angry than you are happy if they go down a little
Yeah,
bit.
that's true. Also true. All right, let's jump into the Who with Pinball Wizard. We'll be back with our last segment. We're almost done with the show. Can you believe it?
It's flying by.
Real quick. We'll be back with Fargo favorites, so don't go nowhere.